Accounts of non-profit making organization. Introduction. So far in our study sections, we have focused on the preparation of accounts for profit-making organizations. Meanwhile, in practice, there are numerous non-profit organizations that also keep financial records. In this study section, we will examine the nature of accounts that you prepare for non-profit making organization. Objective. At the end of this study section, you should be able to prepare relevant accounts for non-profit making organization, including opening statement of affairs, receipt and payment account, income and expenditure account, and balance sheet. Pretest. 1. What are the special characteristics of non-profit making organization? 2. Write short notes on the following: income and expenditures account, receipt and payment account, opening statement of affairs. Content. A. Differences between profit-making and non-profit making organization. Based on the objectives of setting up an organization, there are basically two types of organizations. There are profit-making organizations, that is, trading/business organization, and non-profit making organizations. The final account of profit-making organization consists of the trading, profit and loss account, and balance sheet. The trading profit and loss account is prepared to ascertain the profit realized or loss incurred in a particular period, while the balance sheet gives the financial position of the business at a particular date. Non-profit making organizations, on the other hand, are established not for profit, but to facilitate the attainment of certain objectives, which may be social, political, religious, educational, or developmental. Examples of these non-profit making organizations include social clubs, e.g., Rotary Club, football clubs, associations, educational institutes, e.g., ICANN, NIM, NIMN, religious groups, churches, mosques, etc., and other societies. The major accounts that the non-profit making organizations keep include opening statement of affairs, receipt and payment account, income and expenditure account, and balance sheet. B. Features of non-profit organizations. A common feature of non-profit organizations is their inability or unwillingness to hire competent accounting personnel to keep their books of accounts. In many cases, the accounting records are maintained by a treasurer or financial secretary who is usually not skilled in the double entry system. For this reason, most clubs will not have a trial balance, and this fact results in a situation similar to that of single entry, where it is difficult to prepare the final accounts of clubs. The treasurer will usually prepare the details of amounts received and amounts paid during the years in any of the following forms: cash book, summary of bank statement, receipt and payments account, narrative. In addition to the details of receipts and payments, the following will be provided: assets and liabilities at the opening date, assets and liabilities at the closing date, a few other details relating to the period. C. Typical sources of income for non-profit organization. The typical sources of income for non-profit making organization include member subscriptions, fines on hiring members, donations, special events such as annual dinner, raffle draw, etc., trading operations, e.g., bar. D. Procedure for preparing the final accounts of non-profit organization. Since the features of a club account questions are similar to those of a single entry and incomplete records question, the procedures for preparing the final accounts in an incomplete records question outlined in Study Section 7 also apply to non-profit organizations. Meanwhile, you will adapt the terminology as appropriate. For example, accumulated fund will replace capital, income and expenditure, will replace profit and loss, surplus will replace profit, and deficit will replace loss. E. Bar trading account. Some clubs have bars where they sell drinks and food to members and sometimes non-members. Where a club has a bar, it will be necessary to prepare a bar trading account to show the result of the bar's operations during the year. The bar trading account will normally disclose a profit which is then transferred to the income side of the income and expenditure account the same way that the gross profit of a business organization is transferred to the income side of the profit and loss account. Even though a club is not motivated by profit, it is necessary that the bar be able to pay its way. The bar will therefore charge prices which may not be as high as would be charged by a business organization, but will be enough to cover the cost of the food, drinks, and barman's wages and earn a reasonable profit. F. Opening statement of affairs. This is prepared to show the financial position of an organization at the beginning of an accounting period. It is called the statement of affairs instead of balance sheet because the entries are usually made in single entry. Also, the difference between the total assets and liabilities is termed accumulated fund or capital fund. G. Receipts and payments account. This is the equivalent of cash book in a trading organization. It is a summary of cash transactions regardless of whether it is capital receipt or revenue receipt, capital expenditure or revenue expenditure. Unlike in the trading business where you prepare a double column cash book, when there is bank transactions, items in the receipt and payment account are lumped together in one column and so there is no case for contra entries. As a result of this, it is possible to have a credit balance on the receipt and payment accounts. If this occurs, the balance will be interpreted as overdraft. H. Income and expenditures account. This is an equivalent of the profit and loss account. It matches the revenue expenditures of a certain period with the revenue income of the same period. The difference between expenditure and income, whether surplus or deficit, will be posted to the balance sheet as affecting the accumulated fund. You will add a surplus to the accumulated fund while you will deduct the deficit from it. Example 1. Below is a summary of the receipts and payments of utility club for the year ended 31st December 2005. Balance on 1/1/2005 in Naira 48,310. Proceeds from dance 36,150. Transfer to bank deposit 120,000. Rate 10,000. Entrance fees received 5,000. Wages paid 72,300. Subscription received 300,000. Equipment bought 40,000. Repairs 16,172. General expenses 48,896. Stationery bought 9,790. Interest received on bank deposit 12,000. Donation received 4,200. Additional information. A. Wages of 4,800 were due and unpaid at 31st December 2005. B. Rates prepaid amounted to 2,000. C. General expenses include 3,000 owing since the previous year. D. Of the subscriptions received, 8,000 were in arrears the previous year, while 20,000 was paid in advance for the coming year. In addition, 12,000 was still owing at 31st December 2005. E. The club had the following properties on 1st January 2005. F. Clubhouse 960,000. Equipment 600,000. Bank deposit 400,000. G. Depreciate clubhouse by 5% and equipment including additions within the year by 10%. You are required to prepare 1. Receipt and payment account for the year ended 31st December 2005. 2. Income and expenditure account for the year ended 31st December 2005. And 3. Balance sheet as at that date. Solution. 1. Receipt and payment account, utility club. Receipt and payment account for the year ended 31st December 2005. In Naira. Balance brought forward 48,310. Rate 10,000. Proceed from dams 36,150. Wages 72,300. Entrance fees 5,000. Equipment 40,000. Subscriptions 300,000. Repairs 16,172. Interest on bank deposit 12,000. General expenses 48,896. Donations received 4,200. Stationery 9,790. Bank deposit 120,000. Balance B/D 405,660. Take 2. Balance B/F 48,310. Proceeds from dams 36,150. Entrance fees 5,000. Subscriptions 300,000. Interest on bank deposit 12,000. Donations received 4,200. Making 405,660. Rate 10,000. Wages 72,300. Equipment 40,000. Repairs 16,172. General expenses 48,896. Stationery 9,790. Bank deposit 120,000. Balance C/D 88,502. Total 405,660. Balance brought down 88,502. 2. Income and expenditure account. You need to make some adjustment before preparing the income and expenditure account. A. Wages paid, accrued wages. Take 2. A. Wages paid 72,300. Accrued wages 4,800. Income and expenditure 77,100. B. General expenses paid 48,896. Owing for the previous year 2004 3,000. Income and expenditure 45,896. C. Rates paid 10,000. Prepayment for the following year, 2006, 2,000. Income and expenditure, 8,000. D. Subscription received, 2005, 300,000. Arrears for previous year, 2004, 8,000. Advance for the following year, 2006, 20,000. Accruals for current period, 2005, 12,000. Income and expenditure, 284,000. E. Depreciation. Clubhouse, 5/100 times 960,000 is equal to 48,000. Equipment, 10/100 times 640,000 is equal to 64,000. Utility club, income and expenditure account for the year ended 31st December 2005. Expenditure in Naira. Wages A, 77,100. Stationery, 9,790. General expenses B, 45,896. Rate C, 8,000. Depreciation E, clubhouse, 48,000. Equipment, 64,000. Repairs. Excess of income over expenditure, 72,392. Total, 341,350. Income in Naira. Dance proceeds, 36,150. Entrance fees, 5,000. Subscriptions D, 284,000. Interest on deposit, 12,000. Donations, 4,200. Total, 341,350. 3. Balance sheet. F. Opening statement of affairs. Assets. Clubhouse, 960,000. Equipment, 600,000. Bank deposit, 400,000. Subscription in arrears, 2004, 8,000. Cash balance, 48,310. Liabilities, 2,313,310. General expenses owing, 3,000. Accumulated fund, 2,013,310. Bank deposit, opening, 400,000. Transfer, 120,000. Bank deposit closing, 520,000. Utility club. Balance sheet as at 31st December 2005. Accumulated fund, 2,013,310. Add surplus of income over expenditure, 72,392, making 2,085,702. Current liabilities. Subscriptions in advance, 20,000. Wages accrued, 4,800, making 24,800. Total, 2,110,502. Fixed assets. Clubhouse, 960,000. Less depreciation, 48,000, making 912,000 in subtraction. Equipment, 640,000. Less depreciation, 64,000, making 576,000 in subtraction. Total gives 1,488,000. Current assets. Subscription in 12,000. Arrears. Cash in hand, 88,502. Rates prepaid, 2,000. Bank deposit 520,000, making 622,502. Total gives 2,110,502. Summary. Non-profit making organizations are established not for profit but to facilitate the attainment of certain objectives which may be social, political, religious, educational, or developmental. The major accounts that the non-profit making organizations keep include opening statement of affairs, receipt and payment account, income and expenditure account, and balance sheet. The opening statement of affairs is prepared to show the financial position of an organization at the beginning of an accounting period and ascertain the accumulated fund, which is the equivalent of opening capital in trading organization. Receipt and payments account is the equivalent of cash book in the trading organization, while income and expenditure account is the equivalent of the profit and loss account. This is the end of Studies Section 8. Thanks for listening.